What if your financial success automatically triggered a penalty, a mandatory fee you didn't see coming? The most expensive number you don't track just moved. Because you've had a successful year, you're about to be automatically billed an extra $520. You didn't ask for it, you didn't budget for it, but it's coming straight out of your paycheck. For millions of Americans, the 2026 Social Security update isn't about higher benefits. It's about a direct tax increase on your highest earned income. And it's a direct tax on your success. Every year, there is an invisible line in the American financial landscape. It's the single most critical earnings number for the Social Security system, the maximum taxable earnings or the wage-based limit. Below this line, every dollar you earn is hit with the mandatory 6.2% Social Security payroll tax. Above it, your money is finally free of that specific tax. For 2025, that freedom started when you hit $176,100, but the rule is now changing. In 2026, the ceiling shoots up to a massive $184,500. That $8,400 jump is your tax exposure getting bigger. Pull out your mental calculator. That new $8,400 window, taxed at 6.2%, means you, the employee, are now writing an additional check to the government for $520.80. That's $520.80 you can't invest, can't save, and can't use for your growing family. It's simply gone. If you are one of the high earners who hit that old cap and felt the relief of your Social Security withholding suddenly stopping on your pay stub, you are the one who feels this punch the hardest. You earned more only to pay more tax and watch your take-home income barely budge. The media will frame this as a technical adjustment, linking it to the 2.8% cost of living adjustment, or COLA, for beneficiaries. But for you, the worker, this isn't abstract math. This is the financial system subtly taxing your ambition. You might be wondering, does this affect me? Statistically, it only impacts the highest 5% or 6% of income earners in the United States. If your current income is well below that $184,500 mark, you already pay Social Security tax on all of your earnings, and this specific change doesn't directly impact your tax bill. But if you're a doctor, an executive, an entrepreneur, or a top-tier sales professional, you are the bullseye for this increase. This is the psychological drain of watching your income tick up while your net wealth seems to stay stuck. It's the constant feeling of running on a financial treadmill, and that $520 is only half the story. The real hidden trap in the U.S. payroll system is what you pay above the Social Security cap. Because while Social Security gives you a ceiling, the Medicare hospital insurance tax gives you none, zero. Every single dollar you earn is taxed at a combined rate of 2.9% split, 1.45% each for you and your employer. You might feel trapped by the $184,500, but you need to visualize the vast, unlimited landscape of income that is always subject to Medicare tax. And if your income pushes past $200,000 as an individual, you're hit with an additional 0.9% tax on every dollar past that point. That's a total Medicare tax rate of 2.35% on your highest earned dollars. The system is designed to take an increasingly larger slice of your success without any cap in sight. It breeds anxiety, that subtle stress that comes when you're opening bills and every unexpected expense from a broken roof to a surprise car repair feels like a true punch to your financial gut. You lose the peace of mind of simply checking your bank balance and knowing you're okay. You are cash flow poor, despite the impressive number on your W-2. If you're finding this helpful, and you want to stop feeling trapped by these complex financial rules, subscribe to Finance Flash. So, how do we use this new $184,500 number to empower ourselves? We turn the tax code from a trap into a playbook. First, you must plan for the loss. Don't let your paycheck be the messenger of bad news. The $520.80 is coming. Treat it like a mandatory expense and adjust your budget now. Better yet, create a proactive cash cushion equal to that amount and set it aside right now. By preemptively saving that money, you negate the negative psychological impact when the withholding starts. You beat the system to the punch. Second, Define your financial North Star. For the high earner, your North Star is the ceiling of tax-advantaged growth. Your absolute, non-negotiable priority must be to maximize every single retirement vehicle you can control. Max out your 401k, your HSA, your IR. These accounts are the most powerful and effective shield you have against the constantly rising taxes. You are essentially shifting your highest taxed income into a zone of maximum tax efficiency. This is how you reclaim your earning power. Third, shift your focus to the ultimate payoff. Remember, this $184,500 is the maximum earnings that count toward your future Social Security benefit. As this cap rises, the maximum possible retirement benefit also climbs, projected to reach over $4,000 a month for new retirees in 2026. You are paying more, yes, but you are also locking in a higher foundational income stream for life. Your financial strategy isn't about avoiding the system. It's about optimizing your contribution to maximize the benefit. In the end, this $8,400 shift in the Social Security cap is a wake-up call. It's proof that you must stay hyper-vigilant about your money. Don't fall into the trap of letting the government's limits define your financial freedom. You earn that success. Now, arm yourself with knowledge, take action, and refuse to let hidden taxes breed anxiety. Your career should serve your life, and your money should give you peace, not stress. Understand the game, make your moves, and you will secure the peace of mind you deserve.